Okay, one of your big assignments for this week is the effect of taxes on your business plan. So the actual numbers that you'll be working on in your spreadsheet. So um, everybody should be thinking of 4 taxes, and the appropriate percents are down here. So federal, state, property, and sales tax. For sure, everybody will have federal, state, and sales tax. Your business would only have property if your business plan so far has included that you are purchasing property. So if you bought a building, an office building, whatever it is, then you own something and must pay property tax. If you are leasing it, then your landlord is paying the property tax, who has just added that to your monthly lease payment. So only have property tax if your business owns something. Everybody for sure will have federal, state, and sales. So for federal, it's 20% of your net income. And so show an income tax expense on the income statement, show an income tax payable on the balance sheet. State is 5% of net income. And these are both, when I say net income, I really mean income before tax. So whatever your income number is before you apply tax is what those would be. So for your state, 5% of net income, again, show income tax expense on the income statement and income tax payable on the balance sheet. And then property tax, if you have it, it's 5% of your property value. And that would just simply be an expense just on your normal income statement. So just one of your expense items would be property taxes for whatever the amount is. That'd just be on the income statement. And you could have a property tax payable on the balance sheet. So just record the expense on the income statement and the payable on the balance sheet. Just 5% of your property's value. The last one is sales tax. Remember that businesses essentially collect and remit those to the government. So that's not one paid by the business. The business is collecting it. So if you go to the grocery store and you pay a 5% sales tax and you buy something for $1, your bill will be $1.05. So that 5 cents, the grocery store is not keeping it. They hold on to it and they remit that back to the state. I can tell you how it works in South Dakota. Basically, you charge the sales taxes in South Dakota are based on taxable sales. Certain items are not taxed. It's not very many are not taxed, and it's different in every state. So, for example, in South Dakota, pretty much everything is except medical and a few other little things like that. But generally, even food is. Every city in the state of South Dakota can add an extra tax on top of that. So where I live, there's an extra 2%. So the state tax is 4%. Where I live, there's an extra 2%. Businesses collect that and they remit that just to the state. And the state then turns around and says, okay, so this came from Sioux Falls, so the state receives 6%, they keep 2% goes back to the city of Sioux Falls. So the state is the collector of all sales tax and then just remits it back to the cities as appropriate. So depending on the state you live in, it'll be something along those lines, but we're keeping it simple by just saying, just assume it's 5 no matter where you are. Okay, but just keep in mind businesses remit that and pay it back to the government. So, but it's not an expense of the business. So essentially just think that you'll have a sales tax payable on the balance sheet. And that's it, just sales tax payable, which is 5% of your sales. So just think of it like that. You're good to go. Okay, so hopefully that makes sense. Insert those appropriate rows in your Excel files. Make sure your formulas still work. You're adding up and down correctly, all that good stuff. And that's probably a little bit more of the harder assignment for the week. The other one's is kind of writing up an essay regarding sales taxes or just taxes in general. It's an essay, so probably a little bit easier. This one might be a little bit more challenging for you. As always, if you have questions, just let me know.